Hello everyone, welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today's the 12th of March, 2024. Alright everyone, let's get into it. So I know you're all probably sick of hearing about the ETF stuff recently, but once again, I'm going to talk about it for a few minutes, but as always, there are timestamps so you can skip ahead if you don't want to hear me talking about it, but I'm actually going to be talking about it in a different context today, and that's the context of the bear case. Now, I've been obviously very bullish on the ETH ETFs getting approved, and specifically getting approved by May 23rd, but as I've said in the past, there are a lot of good kind of arguments that basically boil down to one main argument that you can make to give the bear case here. Now, Jake Chervinsky is probably the one that one person I respect the most that actually has been able to give this case without resorting to conspiracy theories. And for those of you who don't know who Jake is, he's been around for a very long time. He's a lawyer. He has been in crypto for a very long time. I mean, I followed him. I've talked to him a bunch. I really like him. He's a great guy. And as I say in my tweet, we need more people like Jake in this ecosystem. But enough gushing over Jake there. He put out this tweet yesterday where he basically gave his ETH ETF bear case. Now, he's not saying that he's bearish on ETH ETFs. He's not saying that they're not going to get approved at some point in the future. He's just saying that this is how the denial would happen if it was to happen on May 23rd. Like that's basically the day that everyone's watching right now. Now, I'll let you read the tweet for yourself. I'll link it in the YouTube description below. But as I said, it really kind of falls into the one category, which is the point number one that Jake makes here, where he says that the SEC would deny the ETH ETFs based on the fact that Gary Gensler dislikes crypto as a concept, sees no value in the technology, and thinks attacking it is politically advantageous. Now, the rest of the points basically kind of fall up into that, or basically feed up into that. So I'm not going to read the rest of the kind of points here, but that is the one that I obviously totally agree with. It is no, I guess, secret that Gary Gensler, Elizabeth Warren, a bunch of other kind of like people at the SEC definitely don't like crypto. They hate crypto, and they hate it to the point where they may actually be fine flipping the table, as I discussed yesterday, where essentially, denying the ETFs is just the stupidest thing that they can do, because it really isn't like a denial. It's more of a delay, where essentially as soon as they deny, they're going to get sued, and then the ETFs are going to happen anyway. And I've given a bunch of my other reasoning around why I think that them denying it would be absolutely dumb, but you guys know me. I always try to stick to the facts and logic, and in this particular situation, the facts and logic could mean nothing, right? Because if there is just these feelings in place where, Gensler hates crypto so much, and he hated the fact that he had to approve the BTC ETFs, and Elizabeth Warren's breathing down his neck, being like, don't approve these things, for such and such reason, then we could see a denial purely based on that. So I totally agree with that. That would be the case where the denial would happen, and I discussed this at length yesterday. I'm not going to rehash my arguments there. So that's the main thing that Jake kind of talks about, and basically kind of, I guess, like gives a bunch of other points around that, which I'll let you guys read. Now, the other thing is something that the Bloomberg ETF guys are saying, and that's something I've discussed before, where essentially there hasn't been much back and forth between the SEC and the ETH ETF issuers or the applicants like there was for the BTC ETFs. Now, as I've described before, I don't consider this to be a strong bear case because of the fact that I think that the ETH ETFs are a copy-paste of the BTC ETFs, so there doesn't seem to be really much reason for there to be much back and forth. Like, I'm not an expert on the process, obviously. Like, I'm not someone who deals with this sort of stuff. I'm not in the TradFi world, but at the same time, I kind of understand the fact that ETH as an asset and BTC as an asset are basically going to be treated as the same in these ETFs. They're going to be custodied by the same kind of custody providers like Coinbase, right? They already have that set up. Coinbase is already having meetings with the SEC showing that the correlation between the futures market and the spot market for ETH is basically the same, if not better, than on BTC side, and the SEC already approved the futures ETFs, so that all plays into it there. So I'm just following kind of that. And if we just base our predictions on facts and logic here, all of it points to the 100% that they should be approved on May 23rd. There is literally zero factual or logical reason to not approve these things. But as we know, we are not dealing with someone who cares about facts. We are not dealing with someone who cares about logic. We are dealing with someone who cares about pleasing his political overlords and basically doing their bidding, right? And he seems fine self-immolating in this case, right? If he was to deny the ETFs, and then go to court and losing just to delay it a few months. He seems fine to do that, at least, or he being Gary Gensler. At least that's my kind of view here. Now, there is the other part to this where I kind of look at this and I'm like, okay, well, as I've discussed before, it is an election year. So does pissing off not only crypto participants, but TradFi kind of participants and people in a bull market shoot the Democrats in the foot to an extent? I know that crypto doesn't play a huge role in the election cycle, not yet at least. Maybe it will sometime in the future. It doesn't play a huge role right now. But in such a critical election for the Democrats, where a lot of polls are showing them, potentially losing, a lot of polls are showing them losing votes in certain demographics, things like that, where they really have to make a really strong showing to have a chance of winning. Do they really want to do anything to kind of take more votes away? Because a lot of the times, a lot of these elections, they're very close, especially on state-by-state basis. They're very close in votes. And there are times where a few thousand votes can make all the difference, or less than that. So what happens if at those few thousand votes were people who voted based on crypto policies, right? Based on the fact that the Democrats have been extremely hostile towards crypto, and people are voting for Republicans because they want a change in government there. And I honestly have the general view that Republicans, Democrats being in power doesn't really matter too much for crypto prices. It obviously matters for policies around kind of like what teams can do and clarity around things being securities or not. But in terms of like the overall crypto bull bear cycles, I think they kind of follow their own thing based on a bunch of other factors. You can't really boil it down to who's in power, I think, because we've had bull markets when Republicans were in power. We've had bull markets when Democrats were in power. Obviously, we're having one right now where Democrats are in power. So yeah, I don't think generally that's kind of something that plays into it there. But in terms of the SEC, in terms of people voting basically on a single issue, and that issue being crypto, you would be mad to vote for Democrats right now if you were a single issue crypto voter, because of the fact that even if you're only concerned with the SEC and not all the other policies around crypto from the Democrats, if you're concerned with the SEC, then you would vote for the Republicans so that they would immediately remove Gensler from the SEC, appoint someone to there that's more pro crypto, because Trump obviously said recently, I don't know if you guys saw, maybe it's not obvious to you guys to saw it recently, he said, I think this was yesterday, he said that he's a fan of crypto, fan of Bitcoin, he's a fan of his NFTs that he's doing. So as a voter, you see all of that and you're like, okay, well, he's obviously going to appoint someone who's pro crypto to the SEC. Maybe it's even Hester Peirce. Maybe she gets promoted to commissioner, or I guess like not commissioner, chief of the SEC there, and Gensler obviously gets the boot. So if you were a single issue voter just based on crypto, then you're definitely going to be voting for Republicans in my eyes. But at the end of the day, like, I am not in the US, I'm not an expert on US politics, but that's how I kind of think it goes. So that is also a reason for them approving this stuff, because as I've said before, the path of least resistance for the SEC is to approve this stuff if we're basing it on facts and logic. But if we're basing it just on the emotions of Gary Gensler and Elizabeth Warren, well, then unfortunately they can do the stupidest thing. And honestly, there's not much blowback on them personally, unless Elizabeth Warren loses her seat to someone based on crypto, then obviously there's blowback there. But for Gensler, who's an unelected bureaucrat who basically just does the bidding of the politicians, for him, he's kind of like, unless I feel like I'm not going to be able to do what I want after I leave the SEC, I'm not going to change my stance here. So all of that obviously falls into it. And I hate that is so political, guys, because this process of approving an ETF should not be based on your own personal feelings towards assets. It should not be based on politics. It should be based on the facts and the reason and the factual reasoning and the logic and the law. I mean, the law should be respected here, because the SEC has already lost in court based on the law, but it's not. And that is the primary reason, or the primary kind of thing that people are bringing up as to why these things could get denied on May 23rd. Now, in saying all of that, last thing I'll say is that I would give it a deadline of about mid-April. If we don't hear anything by mid-April about kind of some back and forth between the SEC and the issuers, we can pretty much say that May 23rd will most likely be a denial. I mean, there could still be some back and forth later than that, but it gets really close to the deadline and it becomes a kind of thing of, can they get it done in time? Because you could get to the scenario where it gets denied based on the fact that they're just not ready yet, because the SEC dragged their feet on this. So that's a reality that could happen, but I doubt that would happen, honestly. But yeah, that's kind of where we're at right now. So hopefully there's not much more ETF stuff over, until something positive happens, because I know you guys are sick of hearing about this, but at the same time, I think it's critically important to keep you guys up to date on this. And it's interesting to me, at least, and I'd like to talk about what's interesting to me on the Refuel. Hopefully I can make it interesting for you guys, because a lot of this stuff is actually really dry, honestly. If you take away ETH from this and you're just talking about like politics and ETFs and you know, people doing stupid things and so on and so forth. It's not really that entertaining. It's more like a soap opera than anything else, right? But yeah, I'm going to leave that one at that for today. I'm going to move on to more interesting stuff, which is Dencun related. So as you guys probably saw already, that 1 minute animated short that was created for EIP 4844 has gone live. You can also mint the NFT, which basically all the proceeds will go to core developers via the protocol guild here. But if you haven't seen this yet, I'll link it in the YouTube description below. You can go check it out. But this is a great little short here. And as I said yesterday, you can try and find all the little Easter eggs in this. I mean, I'm just scrolling through the video here. You can see that the little pipe is named EIP, or the hose I should say, is named EIP 4844. Then you've got like a bunch of different characters at the end here that you can kind of spot. If I go like this, yeah, you can spot all the L2 characters and so on and so forth, right? So I'm not going to spoil it for you guys. You can go give this a watch. I'll link it in the YouTube description below, and also the mint the NFT with all proceeds going to core developers via the protocol guild. All right, speaking of Dencun, less than 24 hours, I think, by the time this you're watching this. Maybe just over 24 hours, actually, by the time that you're watching today's episode of The Refuel until Dencun goes live on the Ethereum mainnet. There's going to be a live stream. I've got a link to that, actually, here. Nixo from EatStaker casted this out on Farcaster. I'll link that in the YouTube description below. But there is also a hard fork monitor at the Beacon Chain website here, so I'll link that as well for you guys. You can scroll down. You can see it here. Time of recording, there's 1 day and 2 hours to go until Dencun goes live. It is finally here, guys. I am so excited to see blobs go live. Like, I can't actually describe my excitement. Like, I'm not as excited as I was like about the merge. Obviously, the merge was just like too big of a thing and a long time coming. But the blobs going live, the IP 4844 goes live, signals another kind of shift in Ethereum's, I guess, like roadmap. Well, not roadmap, so to speak, but like Ethereum's trajectory, where essentially we've gone from having non-purpose-built call data powering rollups to now purpose-built blobs powering rollups, which can turn into full dank sharding at some point, which will have things like data availability sampling, which is part of the longer-term rollup-centric roadmap that has been proposed a few years ago by Vitalik. So this is a huge step here, guys. That's why I'm super excited about Dencun generally with EIP 4844 going live. And I'm finally excited to see what the fees are going to be like. And what's funny is that I'm both excited, but also a little bit annoyed. And I'm annoyed because I just know that the fees are not going to be as cheap as some people have said they're going to be, and they're not going to be as expensive as some people have said they're going to be, but at the same time, they're going to sit in like this middle zone where it will make the people happy that it's cheaper, but then other people will be like, hey, it's not as cheap as you said it was going to be, you scammed and lied to us, haha, Ethereum is still expensive, blah, blah, blah. You just know that FUD's going to happen, so it's going to be annoying to see that, but at the same time, it's going to be great to see the effect that it has and actually be able to put accurate numbers to this without having to make all of these assumptions, because there are a lot of assumptions that goes into any fee estimations for blobs, because you just don't know what it's going to be like. So that's probably the thing I'm most excited about once blobs goes live, the first few weeks, just to see what the fees are going to be like on these roll-ups and how cheap they're going to remain. I expect inscriptions spam to happen in the first couple of days, as I've discussed before, just because people like to take advantage of launches and try to like hype up some meme coin or something. We'll see, or meme NFT, or whatever you want to call it. We'll see. But yeah, I'm super excited for it for that. But you can go check out the monitor for the hard fork. I'll link that in the YouTube description below, as well as a live stream, which I'll be on, by the way. As you guys know, it's co-hosted by myself, ETHStaker, and ETHCat Herders. It will be a great live stream. I'm looking forward to it. It's going to be midnight my time, so hopefully I have the energy. I think I will. I think it'll be too hyped not to have the energy. But yeah, I'll link all that in the YouTube description below for you to check out. All right, speaking of L2s, Tony posted a nice little kind of table here on Twitter where he said, in the last 30 days, Arbitrum, Optimism, and Scroll together posted over 10 gig of data to Ethereum L1. That's more call data than all non-rollup users put together. And obviously, Dencun is coming, where essentially this will move to blobs instead of on call data, because we already have confirmation from Arbitrum, Optimism, and Scroll that they will be using blobs from basically day one. Now, this means that call data is going to not be used at all by these players, as far as I understand, which means that the 10 gig of data is going to move across to blobs instead of call data here. So really, from like a chain size perspective, it should be relatively the same for like the 18-day period, and then obviously once blobs expire, it basically goes back to what it was before that. But because it's like a rolling effect, we don't know exactly what it's going to be. We have estimations. It's not going to be that much more, but it's a rolling effect, right? Like every 18 days it expires, but it's continuous. It's not just like, okay, well, we have an 18-day expiry, now we're going to wait another 18 days before we expire the rest. No, it's just like on a continuous continuous basis. Once the first 18-day period is done, everything that came before that by like even 17 days and 23 hours and 59 minutes and 59 seconds, it's kind of like a rolling expiry there. Actually, I'm curious about that, like how often the expiry is actually done by the node itself. I'm not sure if that's the right way I'm thinking about it, but yeah, but regardless, you get my point here. But yeah, all of this is going to move to blobs. Post for Dencun, obviously, because as I said, but all Arbitrum, Optimism, and Scroll have all said they're going to be supporting it on day one. I don't know if they're going to be supporting it from the fork itself. They may wait like a few hours before they activate it or something. I'm very curious to see which one activates it first. Maybe there'll be a little bit of a race to activate it first and see which one posts to blobs first here. And as I said, I'm also very curious to see what the fees are going to look like there. But anyway, not long now, guys. Just over 24 hours from time of recording until we have it live on the network, and I can stop speculating about basically everything related to 4844. All right, so speaking of L2s, Eclipse, which is the Solana virtual machine L2 that's building on top of Ethereum here, announced a massive fundraise of $50 million Series A, co-led by Placeholder and Hack VC, with participation from a bunch of other venture capital firms, as well as a bunch of angels. Now, full disclosure, I am an angel investor in Eclipse because, as I've said before, the most exciting thing for me is about L2s is not the kind of scalability, because that's table stakes, but it's the ability to experiment with different virtual machines. So as you guys know, I'm an advisor to Fluent and Movement, which are doing WASM and Move L2s, and now with Eclipse they're doing the SVM as an L2. And I've long said that the SVM is really cool tech. I think that it works best as an L2. I've just been very bearish on any kind of monolithic model, and obviously Solana being the poster child for the monolithic model, I've just been bearish on that as a long-term sustainable model. Like I've always said that I believe that it would work better as an L2, and now we get to see it with Eclipse. Now, in saying that, Eclipse is going to be not a full roll-up, because there's just going to be too much data to post to Ethereum L1. It'll be too prohibitive right now. They're going to be a Validium, essentially, where I think initially they're going to be posting their data to Celestia, while obviously having their bridge and proofs posted on Ethereum. So technically, I mean, by my definition, and by I think like an agreed upon definition, they are still considered an L2 here. But it's going to be interesting to see how the SVM does as an L2 versus how it does as an L1. It's going to confirm or deny a lot of these kind of beliefs that people have around layer 1s versus layer 2s, I think. And also, I'm very curious to see what Eclipse does long term. Like, is the Ethereum data availability going to be enough, or I guess the data availability layer going to be enough for everyone long term when we get data availability sampling, full dank sharding, or are we going to see these Validiums just proliferate and that'll be fine? They use obviously EigenDA as well, not just Celestia. And other DA layers like Avail and Nia, they chop and choose, I think, based on what they want to use here. But yeah, very curious to see how that happens. But I guess congrats to Eclipse on the raise, and I'm very lucky to be part of it, of course. Here, they had a lot of angels as part of their raise, actually. They've only got a bunch listed here. You recognize some of these names here, like Eric Wall and a bunch of people from the Solana ecosystem as well, which is kind of hilarious because a lot of these people in the Solana ecosystem say that L2s are garbage and, they're not great, and why would you do L2s when you can do everything on one layer? And then they put money into an L2. Like, I always follow the money here, guys. Like when I look at this stuff, especially when I look at people's opinions on things, because if you really believed what you were saying, you wouldn't have invested in this. And that's like with me, not to toot my own horn here, but I've passed on investing in Monad, that new L1 parallel EVM, twice now, two times now. I passed on investing in it when it was like I think it was $100 million valuation. This was a couple of years ago, I think, I knew it was going to be big at the time. I was like, okay, well, I think parallel EVM is going to be a big thing going forward. I think it's going to be great for the EVM ecosystem overall, but I can't invest in it because it's an L1. And then recently I got pinged again. It's like, hey, you want to invest? I'm like, no, I can't. You guys are still in L1. I can't invest in an L1 because I don't believe that L1s are long-term sustainable. So I'm not going to put my money into something that I don't believe in. And fun fact as well, I also was got offered this Solana deal originally when it was 50 cents. So originally, when they were raising, I got offered that deal and I could have put money into it. I think it was in maybe 2020 or something like that. And it was the same thing for me at the time, where I was just like, okay, maybe this does well, because of the fact that everyone's like, oh, cheaper, faster narrative, people love that, whatever. And it was doing a bunch of stuff differently to Ethereum. And I know how it goes with these L1s. It's like these rotation games that go on. with them. But I passed on it because I'm not going to invest in an L1. I'm not going to invest in something that I think is not long-term sustainable. But then when Eclipse came along, I was like, okay, I think the SVM is cool tech. I've never had a problem with the SVM, and they're building an L2 on Ethereum, which I believe is the most sustainable way to build an ecosystem. So yeah, sure, I'm gonna invest in them here. And I guess like just to put some numbers on it here for the Monad thing. At a $100 million valuation back then, I mean, you could probably safely say it's going to open at what, $10, $20 billion valuation because of just all the hype around it right now. Like that's 100, 200x that I passed on because I didn't want to invest in something that didn't align with my beliefs. Whereas you have other people who have no issue doing that. They have no issue saying all this bullshit on Twitter and then investing in something that goes against, I guess, kind of like what they kind of say. So that's why I've said to you guys plenty of times before, the narrative is the narrative, the reality is the reality. Reality is people say whatever they fucking want because it costs nothing to say that, and a lot of the time it's bullshit. Follow what they do. Follow the money, especially as well. Follow the incentives, the economic incentives, because that's always going to lead you to the truth, or at least most of the time it will lead you to the truth. But anyway, enough ranting about that. I actually said to myself before I recorded the episode, I'm like, am I going to rant about that? Am I not? And I feel like I had to because it just annoyed me a little bit. Where I'm just like am I? There's not many people who actually stick with what they say and actually are telling the truth in this ecosystem. It's just very sad how there's so many people who basically gaslight and lie a lot of the time. I try my best to like not do any of that. Like sometimes I'll make a mistake, and in the past I've definitely been someone who has been more, I guess, bombastic about things. But over the last at least 18 months, I will say that I've tried really hard not to kind of do any of that because it's just like very toxic for the ecosystem. But anyway, regardless of that, I'm very excited about Eclipse. They're going live soon, actually. I think that they're on track for a Q2 mainnet launch as well. So keep an eye out for that. That's not very far away. Obviously, Q2 is next quarter. So I'm excited to see them go live there. Excited to see what they do, like what kind of TPS metrics they kind of reach, what kind of usage they get, what Solana apps come over from, obviously the Solana, the layer 1 to Eclipse, maybe because obviously they can build what they have on Solana on Eclipse, and I'm curious to see the performance metrics between Solana L1 and Eclipse's in L2, because as I said, it's going to show us a lot of things that we've basically been kind of having opinions about, and basically prove our opinions right or wrong on that front there. But anyway, that's enough on that one. Moving on to the next thing. So I came across this article from CoinDesk that basically said that MetaMask is testing fully on-chain payment card with Mastercard. So essentially, it looks like MetaMask is teaming up with Mastercard to issue a new kind of FPOS card here with banks, another company that issues these cards, so that you can use and spend your crypto on everyday purchases everywhere that MasterCard is accepted. Now, this is nothing new. There's been a bunch of these before, but it's cool that such a big brand, or I guess like big name like MetaMask, is getting involved with this. Obviously, it would probably be tied to your MetaMask wallet, whether that be on mobile or desktop, obviously mobile being the main one here. But being able to spend your crypto is definitely something that a lot of people want to be able to do. Being able to kind of buy a coffee with crypto, or pay your bills in crypto, or whatever, wherever MasterCard is accepted, is definitely something that a lot of people have wanted to do. So you'll be able to do that at some point in the future with MetaMask here. But you can read the full article for yourself. I'll link it in the YouTube description below for you to do so. All right, so last thing here I wanted to talk about, because obviously like the market stuff is heating up yet again, as per usual. It's getting hotter and hotter as the days go by. People are doubting that it's a bull market still, which is hilarious to me. But regardless of that, you guys will remember that like mid-ish last year, I was putting out all of these pro tips, these bull market pro tips. And I actually have a whole thread of them, which I'll link in the YouTube description below here. Yes, okay, I found it here. So there are, I think, like 6 of these tips or something like that I put out. But one of the tips that I wanted to focus on was this one here, where I said, which was my second tip, where I said, pro tip number 2 for the bull market: outperforming USD is easy mode, outperforming ETH and BTC is hard mode. 99.99% of coins are a trade, not an investment. You best remember that when going down the risk curve. Now, we all know that outperforming ETH is incredibly difficult. Like I think a lot of you probably denominate your portfolio in ETH, and then anytime you go into another coin, you're probably measuring it against ETH, or you've traded ETH for it. And we're not even talking about taxes in this, by the way. Like, take away taxes for now. Taxes make this trade even worse for you. But regardless, in a bull market, everything is going up in US dollars. So it's very, very easy to outperform USD. It's just very easy to outperform USD generally. But it is very, very difficult to outperform ETH and BTC. Especially over the long term. Like over the short term in a bull market, if you do the trade right, maybe you can do it. But if you look at the longer term, go and look at all the charts for the longer term of things against ETH and BTC. pretty much almost all of them are down only. And there are also kind of cycles to this where essentially you might have one cycle old coins pumping against ETH and BTC in the next bull market. But then after that it's their like last kind of swan pump, as I like to call it. And then they just basically bleed against ETH and BTC forever from there. The poster child of this is probably Litecoin, because Litecoin has been around for a long time. And I know no one talks about Litecoin anymore for good reason. It's kind of useless. But I'm going to bring up the chart here for you guys. I'm going to bring it up on my other screen just to illustrate to you what this looks like over different cycles, because I feel like it's very important to understand this if you are trying to go down the risk curve and trying to outperform the kind of market here. So I'm gonna measure LTC against BTC because it's been around for the same period of time. ETH came later than Litecoin, so there's not as much price history. But if you look at this chart in front of me here, so look at this. This is what I mean by it having two cycles where it can perform well against BTC or ETH, and then after that it's down only. So look here. It had, in 2017, it performed well against BTC, where it went up a bunch. You can see it on the chart here. Then, again, it did a bit of a pump in kind of like 2019 here. But then, like, it was down only after that. You can see here, like, it's down only, like, absolutely down only since then. And if you take the peak of against BTC, which was Feb 2018, to the bottom now, it is down 94%. Right, so it's gone down 94% against BTC in that entire kind of like time period there, and you haven't really outperformed at all. Now, of course, I'm using the example of Litecoin, which is obviously nothing special. It's not like a project that anyone cares about or focuses on really anymore. And it was originally just started off as basically just like a joke fork, to be honest. I mean, it was just kind of Charlie Lee experimenting, but then it got bigger and he kind of got rich off of it. But that's a story for another time. But that's just one example here. But if you want an example in the ETH ecosystem, I think there's one, a perfect example here of YFI ETH. So actually, maybe it's better to me to do this because it'll give me more price history. So this is the perfect example of what I mean. So for those of you who are around in DeFi summer, you will know what I mean by this. So YFI, or the native token of the Yearn ecosystem, it started off at 0. It was a pure yield farm token. There were no VCs. It was one of those fair launches that people like to meme about. And it was launched at 0. It went up to, at peak, I think it got to like $100,000 or something. This isn't going to show the peak price, but it got to like $100,000. And it peaked at like, I think, 120, oh no, I can actually see it on the chart here, 115 ETH per YFI token. So obviously a huge peak. Now look at the chart that in front of me. For those listening on the podcast, I'm just going to illustrate the chart. From that point, which was September 2020, it's literally down only the entire time. It has not set anywhere near that kind of high since then. And if I put a percentage terms to it, from the Pico top on September 2020 until today, it is down 97.7% against ETH. If you put 1 ETH into it, you would have 0.03 ETH left. So you would basically have $120 left today of your ETH instead of $4,000 if you put that into YFI then and held it, obviously, if you held it all the way down here. I'm not making any comment on Yearn as a project or YFI as a token itself. I'm just showing you what one of the worst case scenarios look like here. And the reason why I picked this token is because at the time, it was stupidly bullish, guys. Like, I can't even begin to describe to you how bullish everyone was on this token. Like, it was next level bullish because you had meme coin wrapped into it, because YFI was a meme coin back then, 100% was. You had literally everyone talking about it at the time. It was part of DeFi Summer, which everyone was talking about. It was headed up by Andre Cronje, who was considered a god at the time because he had a bunch of other things I think he was working on as well. And it was a new kind of way to do yield farming. So people are excited about that. There were main characters like Blue Kirby around pumping it and stuff like that. And it just felt like it could go up only forever because it was a general bull market too, leading into the end of 2020 here. Obviously, everyone was sitting at home because it was COVID lockdowns and stuff too. But at the time, that was by far the most bullish I've ever seen anyone collectively on a token. And I'm not talking about like BTC and ETH because that's, I guess, outside of this. But I mean like the tokens and other coins out there. Even like last year when you saw everyone being bullish on Sol because it went up a lot, that was still nothing compared to what happened with YFI. That definitely was still nothing compared to YFI, just to give you some context here. And then you can see what happened to it after it. So my main point for you guys here, I mean, there's two main points, and the reason why I bring this up. First one, please understand when you go down the risk curve and you're trading away your ETH or BTC for other tokens, you're going to lose long term 99% of the time. So if you're treating it as a trade and you're trying to stack more ETH in BTC, be my guest. I'm not saying don't do that, but please don't look at it as a long-term investment against BTC and ETH, because 99% of the time you're going to be wrong, and you're going to be completely wrong. It's not just a little bit wrong, you're going to be 90+% wrong, which hurts. Like, let me tell you, I've done this before. It hurts, guys. You think you're not going to hold it down 90%, and then you end up holding it down 90% for one reason or another, and then you look at what you could have had versus what you have now, and you're like, okay, like that is a really shit decision, and you feel really shit about it, and it's not a great feeling there. And the second point is that just because a token or a coin seems to be something that everyone is incredibly bullish on for like 3 months or 4 months, a short period of time in a bull market, does not mean that that is going to remain true for the the longer term future. It is usually the opposite. People will be really bullish on things because they're shilling it for one reason or another. They're using the market as liquidity, whatever else. This happens all the time. You guys know, if you've been in it long enough, this happens all the time. But just because people are really bullish on something for 3-4 months, don't extrapolate that out to years. Don't think that 3-4 months is it at all illustrative of what's going to happen over the long term. It is 100% not. And even ETH went through this. In 2017, my God, ETH was like the most bullish thing anyone had ever seen. Like, everyone was talking about the flippening. Everyone was talking about how Ethereum was going to go to proof of stake in 2017. It's going to take over the world. Screw BTC. ETH is the new thing here. So on and so forth. And then in 2018, ETH went down 90% against BTC. It's come back now and hasn't gone. It's come back up a lot since then. It hasn't gone down as much this bear market. But still, ETH is the outlier. ETH is the 1% or the less than 1% that actually came back from the depths of hell. Most of these things do not do that. So please keep that in mind when you're trying to play the bull market, trying to go down the risk curve here. And this is just coins. I'm not even talking about things like NFTs, which have also gotten slaughtered against ETH as well. Who knows what they're going to do, over the short term. Maybe there's a wealth effect and people that have ETH go into NFTs again. But I'm always talking more longer term here, because people get caught up in the short term. They extrapolate it out to the long term, and then they end up getting wrecked on this. And again, I have firsthand experience with this. In 2017, I held something through to 2018, and it went down like 90-something% against ETH. And luckily, I didn't put that much ETH into it, but it still hurt because I was like, why the hell did I hold it down that long? And I'll tell you why. Because all during the period that it's underperforming ETH and going down, the project is still kind of like being worked on. People are still bullish on it. People are still saying, oh, it's just a cool-off phase. We're going to go back up soon. And then, of course, if it's a bear market on top of that kind of thing coming down generally against ETH, it's going to be stupidly hard to outperform ETH. And actually, I think that an even better example than YFI is Link. I love Chainlink, guys. Don't get me wrong. I love Chainlink. I think it's an awesome project. It powers so much of DeFi. I've always loved Chainlink. But if you remember in not the last cycle, the cycle before, if you were around back then, Chainlink was really bullish. And from July 2018 to August 2020, it went up 10,000% against ETH. So it went up a lot against ETH, right, over a long period of time. But then August 2020 to November 20, where am I going? To November 2021, which was like the start of the bull market, really, August 2020, to the end of the bull market, November 2021, it went down 90% against ETH. Even in a bull market, it went up in USD, of course, but even in a bull market, a raging bull market, it went down 90% against ETH, right? And then since then, I mean, if you even look at today, what it's at, it's still down 90% against ETH, right? And this is 1,316 days later. As I said, nothing against Link. I just use it as an example of a token that has gone, really well against ETH and then just like down only against ETH for a long period of time. You can actually see like it didn't reverse the whole move, of course, but most people end up entering later on in the move. So I would say most people entered around here in the move. I've just circled it on my chart here. And then, yeah, I mean, depending where they exit, who knows? Maybe they exited down here before Link pumped again. I don't know. But anyway, enough of the market talk there. I just thought it was prudent to talk about that pro tip because I know a lot of you are definitely trying to increase your ETH stack by trading other things, but you have to keep all of those points in mind that I just mentioned there. But on that note, that's going to be it for today. So thank everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give it a thumbs up. Subscribe to the newsletter, join the Discord channel, and I'll catch you all tomorrow. Thanks, everyone.